scary Monday for Indian markets. Everything was on the butcher block. Problem happened in Argentina and Indian markets, they suffered. What is the way forward for Indian markets now? Technically, things are looking slightly shaky as Nifty has gone past below 6150. So how should one invest and trade in this kind of a market? Let's discuss that with Ajay Srivastava, Dimensional Consulting. Along with him, Pratik Agrawal, Chief Investment Officer with ASK Investment Manager, and to give us a better understanding of which way charts are shaping up, Sandeep Wagle, Founder and Managing Director of Apta Technical Advisory. Now, before I start the panel discussion, here's a look at how things shaped up for Indian markets for the day gone by. And like I said, it was indeed a scary Monday for Indian markets. Nifty has cracked below 6150. Today, Nifty has registered its biggest fall since September 2013. So we are taking the clock back to all the way what happened in the month of August and September, where Indian currency had plummeted. For bookkeepers, this is the lowest level since 29th of November. All major indices were in red. Even though European markets were decent, Nifty closed at the lowest point of the day. The bank Nifty led the decline. PSU banks were the worst hit, and beta stocks across the board, they took it on the chin. Let me be more specific here. JP Associates and Hindalco, they were one of the biggest loser on the Nifty. With the exception of HCL Tech and Ultratech Cement, none of the key Nifty 50 stocks managed to buck the trend. And metals also had a very poor session. As Tata Steel and JSPL, they both came down on strong volume. The lone ranger from the FMCG basket was HUL, which managed to buck the trend because of good numbers, strong management commentary, and a better volume guidance for FY14. And JP Associates, check on that one. Hello. 13.5% down for JP Associates. Someone was selling that stock as if there is no tomorrow. 14% down, top traded counter, and it cracked on nearly 2.5 crore shares. So problems in Argentina, and why are we suffering, Pratik Agrawal? I mean, the problem has got nothing to do with what's happening in India. Turkey and Argentina are very small economies, but looks like the correlation trade is at play again.
Not only Argentina, I mean, we keep tracking various currencies, and if one emerging market currency takes a tumble, I think all emerging market currencies behave in sympathy. So to that extent, we are getting impacted. But I really thought the problem is nearer home. You should look at what is happening in China. China, may be on the verge of its first default in a trust structure. So, if you look at today's market, it is financials and metals which have taken a big knock, both, getting impacted because of China.
Sandeep, how shaky are the charts now? Do you think the trend has reversed? Because if I map today's price action, buyers have become sellers.
Absolutely, Nikunj. Last Wednesday, I think I had a view that we will go till 6450. 60, 350, 60 has acted as a very strong resistance. That has not happened. What has happened on last Friday was very clear that yes, some weakness has set in, and today is an absolutely clear indication that the weakness is to follow. Now, how much down further from here? I would look at the prior bottom being tested, which is 5980, 5970, somewhere around that. So, which is another 100, 130 points, even from the current levels. Now, having said that, I am not clear about one thing, Nikunj, which is that whether we will have an up move towards 6200, 6230, or we go down one way, and nobody can be clear on that, this thing. So, that is the only lack of clarity that I have, but target-wise, I think we will test somewhere around 6000 on the Nifty, and that could happen in the next couple of trading sessions.
Right, so based on today's price action, I think there is a consensus view on the street that 6350 now will really act as a high watermark region for Indian markets, and it will take something magical, honestly, in the short term to really propel Nifty above 6350. Pratik, this question is coming your way. Now, in first leg of any kind of a global adjustment, all asset classes, they move in a synchronized manner. So there is a big adjustment happening in emerging market currencies. All emerging markets are moving in a synchronized manner. But once the dust settles down, Pratik, do you think Indian markets will stand out and they will start outperforming? Because a lot of our macro issues and a lot of our economy related problems have been sorted.
No, so versus ourselves 5 to 6 months back, we are in a significantly better position. There is no denying that. But if we are talking of growth rates coming back reasonably soon, I think there are a lot of question marks to that. So for example, people do believe that capex growth will come back. Fact of the matter is, the lot of the capex growth that we saw between 2003-4 to 2010 was on account of public-private partnerships and bank funding. Now, if banks have reached 10% of their books on infrastructure, where will we find more money? So, I am not completely convinced about growth coming back, especially led by capex, even after 6-7 months or a year kind of a time frame. But other bits of the economy should continue to do well.
Ajay, let's talk about banks. How should one approach banks now? Because bank traditionally is the favorite whipping boy, which means anything goes wrong in the global market, traders, they simply come and slam dunk banks.
When you say the round currency, I still believe that what happened in the last 3 years signals that the central banks will move to stem it. Whether Fed will move or not, because the Fed is mostly focused on the US, I'm not sure. But the central banks will move to stem it. I think the Mexican government has taken a stand that 3% devaluation is par for the course. We will let it ride it for the time being. Banks are better prepared to handle it. So I think a knee-jerk reaction perhaps not warranted. Over-optimism, I think, is the killer in the market. But saying specifically banks, I still believe that there is value in certain private sector banks which will come to the fore if there is a severe correction. And I can name them like things like ICICI Bank. I'm not naming HDFC Bank after a long time because I think there's, saturation stuff happening there. But things like ICICI Bank, maybe even a Yes Bank could come true. But having a caveat here, what we don't know, this $38 billion raised by the banks, how much of $38 billion was genuine fundraising and how much was round tripping of the money? Even RBI hasn't told us this. So the so-called $38 billion defense actually could be only 5 or 7 billion defense. So we're trying to unravel that number and then come to the conclusion whether banks remain a stable bet. But I think if ICICI Bank comes to about 950, it looks to be a good bet to buy into.
Sandeep Agle, how badly are the charts looking for the Bank Nifty?
Well, one of the worst in the past so many weeks or months, I would say, Nikunj. Even the monthly pattern is now getting spoilt, is what I would say. Weekly pattern has got spoilt on the first day of the week, and we have crossed a very significant support at 10,800, 10,790. So I sense the Bank Nifty will go to 10,300, 10,200, somewhere between that. So from the current level of 10,550, 600, I see a 3-4% cut even from the current levels. And I don't see a 100 points up move from the current level. So if I get that, I would be comfortable shorting that with another 100 point stop loss and play for a 500 point downside.
Still feel, Sandeep Agle, the Bank Nifty will remain a 5-digit index. It will not become a 4-digit index.
Nikunj, I am not that bearish. Yes, 10,300, 10,250 should act as some kind of a support. And frankly, I don't have a view of a Nifty grossly below 6,000. It may go down to 5,950 or so. But yes, if you talk of 5,500, then I would agree that it would go down to the 4-digit index, but not otherwise.
I wonder why is Pratik Agrawal smiling. Pratik, on a day markets are down more than 2%, you're smiling when Sandeep Agle is talking about weakness in the Bank Nifty.
No, sorry, I was smiling on your question, not on his reply, the way you put it. No, but that said, we for a long period of time have been negative on banks. In the previous round, I was talking of the fact that stress on the capex part of the economy would remain for some time. I think there is a consensus on the street that interest rates are headed down. I think even there I have my disconnect. If savings rates are down so much and if industry even in this part of the year need so much of credit that, in this kind of times when growth has slowed down so much, need so much of credit that had it not been for FCNRB, the credit growth would have been more than the deposit growth. I really fail to see how would lending rates really go down in a significant manner in the near term. So the stress on the banking system would remain. That apart, we have a Basel III which hits in 17. So you do have a window of FY 15, 16. So if there is a good period that comes in, most of the banks will actually rush to the markets to raise equity capital, which itself kind of kills the rally. So that is my whole issue with the banking space at this point in time.
Ajay, so at a time when large cap stocks have taken a decisive turn, at least in the short term, I wonder what is in store for mid caps, because when we started the year, 9 on 10 analysts on the street were of the view that, hey guys, 2014 will be the year for mid caps.
See, mid-cap, the only universe we like always is the pharma space. And the reason is that this pharma space mid-cap has the best value in terms of buyout and in terms of profitability. All other mid-caps, including the IT mid-cap, you will see, they have underperformed the big time in terms of the last 3 to 5 years that you've seen it. Because purely they have no scale to compete against the larger majors. So one, if I were to buy mid-cap stories, and I'm still focusing on, is focus only on the healthcare space, focus only on the formulation and people who are exporting, including services. Biocon, you already named one of them. Now that, again, you have to watch for euphoria. Biocon euphoria went berserk. The stock climbed from 380 to 490 in less than 2 months. It's traveled back to 420s of thereabouts. So the stocks are all good, but you know when to buy into. You don't buy at the end of the euphoria. You start to be patient with these stocks, otherwise you are in the wrong stake. People who bought at 490 or something, Biocon will be ruining why they bought Biocon. It's a good company. But people who bought at 380 and in cashed out will feel better. So it's not about, but I would still say, other mid-cap stories, ancillaries, auto ancillaries, don't do it. That's the one which is going to bleed you the most. You will not get volumes to exit. You will see circuit filters coming into place. And, it's a mirage to say you make money out of small and mid caps. By and large, everybody I know has lost money more than they made money.
Pratik, the big one tomorrow is the credit policy. The consensus view on the street is that tomorrow's credit policy will be more like a routine event and RBI will maintain a status quo.
I would go by that view. While the last CPI number was slightly lower than expected, the core inflation numbers continue to tick up. This is also a year wherein M3 has started to move up and you have an elections. I really do not know how many election years you really had suppressed inflation numbers. So if RBI really wants to preempt or cull out any inflationary things from the economy, I would really believe that they would keep interest rates where they are and not bring it down, especially in the context of what is happening globally just about now.
Sandeep Pagle, what are the charts telling you for telecom as a group? Because the news development which came during the market hour was supportive for Bharti and Idea. The stock managed to buck the trend in the mid-afternoon trade, but I guess the weight of selling again there was so strong that Idea and Bharti, they both plunged in the second half.
Nikunj, I think the worst is being discounted. Idea from a level of 180, 185 over the last 4 to 5 to 6 weeks has fallen now to 144. So I presume that there is no point in creating a fresh sell at this point of time. Yes, it can fall down by another 7 and 10 rupees, which is another 4-5%, where it may make a bottom. I think the results are not going to be good, and this is what the prices are discounting. But most of it is inbuilt into the price is what I guess, and in that sense I will not be comfortable come what may to create a fresh sell position at this level. In fact, nearer 140 to 130, if one can take a little longer term view, I would talk of a target of 170, 175 in Idea, having taken a week view of a month or so. And Idea may surprise us on the upside is what I would say over the next few weeks.
Ajay, what happens to cyclical in this kind of a scenario? Because we've seen more like a, start and stop kind of a pattern for some of the economy related names. So in specific, what is your view on cyclicals, and then specifically, what are your thoughts on L&T?
You named it. We started building a position in L&T, and I think the premise here is that in the next 2 years, their order book, which will come from overseas, should be higher than what they are dependent upon in India. I think that's the premise of our buying, one. Number two, they will unravel all the subsidiaries that they have, and therefore hopefully unleash value post the bank license, which definitely should come their way. So there are a lot of positive element building, and if rupee depreciate further, the West Asian contracts are going to give them better realizations. So lower reliance on India, West Asian contract giving dollar earnings, a bank license on the way, maybe some sale of subsidiaries and projects, look to be a good potent mix for a good healthy 20-30% run up in the stock price.
Ajay, Ranback C, now it looks like it's a bottomless pit for Ranback C, because it lost 17-18% on Friday. It has lost another 8% today, which means a company of the size of Ranback C has lost nearly a quarter of its wealth in just 2 trading sessions.
We had gone long on Ranback C in the morning, early morning when it fell 19%. I'm not sure whether it's in the money, out of the money. We will, if it corrects, we will add on position, because the logic is at 14,000 crore capitalization, which is even for just about 2 billion plus, there is still a lot of value in the company from the domestic side. If we just shut down everything related to exports, just for a minute's sake shut down, everything is very strong. The domestic story is very, very strong, unless something really drastic happens domestically. The retail brands are doing extremely well. The network operation in India is very good. So if we just actually cut off the global operations, Indian story itself will be worth $3 billion plus. Remember what domestic formulation valuation Piramal sold for Abbott? I think, was it not 18,000 crores, if I'm not wrong the number, right? So imagine that today the valuation of Ranback C is 14,000 crores. Lot of value there. If it corrects, add.
I think, come in on what do you like from the pharma space? When I say what do you like from the pharma space, do you like MNC pharma names? Are you still sticking to US-based pharma companies, or now you're really taking a deep dive in some of the contra and beaten down pharma names like Wockhardt and Ranback C?
No, we continue to stick with some of the largest pharma names. Pharma is an attractive sector in the sense that the size of the opportunity is really large, both domestically and in the export market. But at the same time, it's an extremely risky space to be in because of the kind of litigations and the losses that it can entail. So we have been with the best of the pharma companies, and thankfully till date our names haven't really got impacted much by litigation. So that continues to be our stance.
Sandeep Aglia, what are your top ideas for tomorrow morning?
Nikunj, I would go with a sell in the Yes Bank. You have already scared me with that 4-digit this thing. And Yes Bank, I think, would give you a 7-8% on the downside. Stop loss of 327 and a target of 300. The second call is a buy in a Hind Unilever. In this market, I think this stock does well. So I would want, in case of a bounce back, I think Hind Unilever should outperform on the upside. I would buy it with a stop loss of 567, target of 600.
Sandeep, the print of 8500 on the bank nifty was not long ago. It only happened 6 months ago. Sometimes public memory is very short. We tend to forget what happened to our markets only 6 months ago.
Yes, Nikunj, but the way it has scaled up over the past 6 months, and it has made a high of 12,000 something, that also has to be in mind. And from there, if we go down to 4 digits, which is say 9,000 something, then I think the Nifty will be at 5,500 or maybe even lower than that. Now that is what I would not be. I don't expect Nifty to go down that much. I think 6,000. A little below that should act as a very strong support. The monthly charts are still quite strong.
No evidence based on global cues as well that will go below 6,000. Pratik, are you happy to buy the stocks which you currently like at the current juncture, or are you waiting for a slightly more deeper and harsher correction before you add more into your existing holdings?
No, so we continue to buy into our existing holdings as and when we get fresh monies. So we are comfortable buying them. I mean, what we hold is what has done well over a large part of last year. But if you look at the kind of markets we have had last year, even the best performing part in terms of overall portfolio has done less than 20%. Markets have done 8 to 10%. So thing is, in that part, the profits have compounded by a higher percentage. So to our reckoning, the businesses are available to us slightly cheaper rather than being more expensive. So we are guys who keep buying businesses as long as they continue on their growth path, and hence we continue to invest into the businesses that we have been holding.
Okay. Gentlemen, really appreciate your time, and let's hope after a scary Monday, went for a stable Tuesday. That's it on this edition of Markets Tomorrow. Thank you for watching the show.